Move over, Saudi Arabia and Russia. America now has more untapped oil than any other country on the planet. That's according to a new report from Rystad Energy that estimates the U.S. is sitting on an incredible 264 billion barrels of oil reserves. It includes oil in existing fields, new projects, recent discoveries as well as projections in undiscovered fields. More than half of America's untapped oil is unconventional shale oil, according to Rystad. Shale oil is the previously unreachable crude that, thanks to fracking and new technology, has reshaped the global energy landscape and vaulted the U.S. into the upper echelon of global oil producers. Related, why the U.S. oil stash has shrunk 6 weeks in a row. The findings suggest the U.S. could shoulder even more of the weight of global oil production in the future, especially as prices recover. U.S. output has declined modestly over the past year as a result of oil prices crashing to levels that aren't profitable for all but the best shale oil fields. But there are seas of oil just waiting to get tapped once oil prices rebound. Texas, home to the Eagle Ford, Permian, and Barnett shale oil plays, holds more than 60 billion barrels of shale oil alone, Rystad estimates. That's more than the untapped oil in all of China. There are also vast sums of oil beneath the ground in North Dakota, where the Bakken shale oil play sits. Thanks to the shale oil boom, the U.S. is now sitting on more oil reserves than Russia, which Rystad estimates as having 256 billion barrels of untapped oil. The next richest countries in terms of oil after that are Saudi Arabia, 212 billion, Canada, 167 billion, Iran, 143 billion, and Brazil, 120 billion. Rystad, an independent research firm based in Norway, argues its estimate does a better job of capturing the real picture of global oil reserves than more conservative metrics often cited. For example, the closely followed BP statistical review pegs U.S. oil reserves at just 55 billion barrels, compared with 301 billion barrels for Venezuela. But Rystad notes that BP relies on numbers reported by national authorities and Venezuela's figures include undiscovered oil. Rystad also points out that countries often exaggerate their oil reserve figures to inflate their standings within OPEC. The upside potential is much larger in the United States, Rystad said. All told, the world has 2.1 trillion barrels of untapped oil, or 70 times the current global annual production rate, Rystad estimates. While that may sound like a ton of oil, Rystad argues it's actually proof that there is a relatively limited amount of recoverable oil left on the planet. That's a big deal given the fact global oil demand continues to grow, even in today's sluggish economy. Many expect that growth to remain steady or even accelerate as people in fast-growing economies like India and China buy cars. Oil alone cannot satisfy the growing need for individual transport, Rystad concludes. Don't bet against the resilience of U.S. oil companies. Many expected U.S. oil output would collapse under the weight of a lengthy price war with the mighty OPEC, the fractured oil cartel that's meeting in Vienna Thursday. The U.S. oil boom, fueled by the shale revolution, has obviously taken a few punches from OPEC's strategy of all-out pumping. But the latest numbers show that American production continues to remain stubbornly high in recent months despite the crash in crude to as low as $26 a barrel in February. The U.S. pumped 9.13 million barrels per day in March, down by a minuscule 6,000 barrels from the prior month, according to stats released this week by the U.S. Energy Information Administration. That represents a deceleration from recent monthly declines. By comparison, daily U.S. output dropped by 58,000 barrels in February and by 83,000 barrels in December. It's been more resilient than everybody expected, even the producers themselves, said Thomas O'Donnell, a senior energy analyst at consulting network Wikistrat. Yes, the U.S. is pumping about 500,000 barrels of oil less than the same period of 2015. But that year earlier period was a near all-time highs. All told, output is down less than 6% from the April 2015 peak. U.S. production is actually up by nearly 11% from 2014 and nearly double what it was in 2011. These low prices have paused the shale revolution, but not killed it by any means, said Matt Smith, Director of Commodity Research at Clipper Data. So what gives? Firstly, all of a sudden there's a lot more oil coming from the Gulf of Mexico. Production there has been on the rise due to the long lead times required by expensive deep water projects. Gulf of Mexico production rose by 60,000 barrels between February and March, and the EIA believes it could hit record highs next year. The other thing is that U.S. shale output hasn't declined by as much as feared, despite deep cutbacks in spending. The EIA actually revised its February numbers higher due to stronger pumping from North Dakota, home of the huge Bakken shale. Chalk this up to the fact that cheap oil forced American shale producers to get a lot better at pumping cheaply. Many have made huge operational improvements that allow them to drill more oil per rig, bringing costs down. They don't give up easily. They're fighting for their business, said O'Donnell. At the same time, costs have come down significantly due to price cuts by oil services who have lost a ton of business amid the downturn. None of this is to say that frackers aren't struggling. Many are, and at least 77 North American oil and gas producers have filed for bankruptcy since the start of 2015, according to law firm Haynes & Boone. But the ones that have survived have become better at pumping more with less. The productivity increased at a dramatic rate, at rates you don't see during an industrial revolution, said O'Donnell. The big question going forward is whether the recent rebound to $50 oil breathes new life into the U.S. oil boom. These higher prices are likely to entice at least some frackers to start pumping more. The key element here is the so-called the drilled but uncompleted wells sitting in shale plays. These were not economical sub $40, but are very much at play at $50, said Smith. For instance, Whiting Petroleum, the largest producer in the Bakken, recently said the company would start tapping its collection of 100 uncompleted wells if oil prices can stay at $50. Bringing down that number of those wells would be one of the first things we would do at higher prices, Whiting CEO James Folker said during a conference call at the end of April. If history is any guide, investors may be underestimating the resilience of shale producers. But since it's a relatively new technology, it remains a bit of a mystery. It's never been tested. The dynamics are not known by anybody, said O'Donnell. The U.S. oil boom has time and again proven very hard to kill. Despite OPEC's strategy of flooding the oversupplied market with tons of crude, American oil production has not fallen off a cliff. And now that prices have rallied back to $50 a barrel, there are early signs that U.S. shale is on the rebound, too. Just look at how the closely watched Baker Hughes oil rig count has stopped collapsing and started rising. The tally rose last week for the third straight week, the longest streak since last August. The recent uptick represents an intriguing reversal. U.S. oil rigs had declined 20 of 21 weeks up until mid-May, when oil prices hit 4-month highs above $47 a barrel. Rising rig counts could be a sign that the higher oil prices are luring U.S. oil companies to start pumping away again. That in turn may cause other drillers on the fence to add rigs of their own. You can get a herd mentality. Nobody wants to be the last one back, said Thomas O'Donnell, senior energy analyst at consulting network Wikistrat. To be sure, the U.S. rig count remains down dramatically, 79% to be exact, from the October 2014 high. And it's too early to say if the recent rise is just a blip or part of a broader trend. Still, the problem for the oil industry is that an influx of American crude may not be needed at this point and could actually backfire. The epic supply glut that caused crude to crash has only recently begun to ease, and many believe the market is not yet in balance. Capital Economics warned in a recent report that increased U.S. drilling activity will limit upside for oil prices. That could especially be true if recent supply outages in Canada and Nigeria are resolved, adding more supply to the market. Morgan Stanley recently warned that rising U.S. supply and fading outages would renew the oversupply problem, sending oil crashing back to $30 a barrel. The U.S. oil boom has definitely taken a few punches from OPEC's price war, and more could come. The U.S. pumped 9.1 million barrels per day in March, the latest month the Energy Information Administration has estimates for. That's down from a peak of 9.7 million in April 2015, though it's not the collapse some had been banking on. The oil industry's resilience is a reminder of how much more efficient companies have become thanks to a combination of new technology and dramatic price cuts for drilling services. In other words, many frackers no longer need $90 oil to turn a profit. It's pretty dramatic how much costs have fallen. There have been tremendous advances, said O'Donnell. That's why a number of American oil execs have already signaled they could start pumping more at current levels. For instance, last month RSP Permian, RSPP, said $45 a barrel is an inflection point that would cause the oil company to think about adding a rig. Pioneer Natural Resources, PXD, also indicated its plan to add 5 to 10 rigs at $50 a barrel, a threshold hit late in May. Keep in mind that today's rigs can pump an average of 27,000 barrels of crude per day, according to Capital Economics. Compare that with 2 years ago when the average rig produced just 6,000 barrels a day. That means the rigs added in recent weeks could slow or even stop the recent decline in U.S. oil production. Just like people didn't know the dynamics on the downside, the dynamics on the upside are a bit unknown. Shale on the rebound is a new phenomenon, said O'Donnell. Move over, Saudi Arabia and Russia. America now has more untapped oil than any other country on the planet. That's according to a new report from Rystad Energy that shaped the global energy landscape and vaulted the U.S. into the upper echelon of global oil producers. Related, why the U.S. oil stash has shrunk 6 weeks in a row. The findings suggest the U.S. could shoulder even more of the weight of global oil production in the future, especially as prices recover. U.S. output has declined modestly over the past year as a result of oil prices crashing to levels that aren't profitable for all but the best. Estimates the U.S. is sitting on an incredible 264 billion barrels of oil reserves. It includes oil in existing fields, new projects, recent discoveries as well as projections in undiscovered fields. More than half of America's untapped oil is unconventional shale oil, according to Rystad. Shale oil is the previously unreachable crude that, thanks to fracking and new technology, has reshits. Thanks to the shale oil boom, the U.S. is now sitting on more oil reserves than Russia, which Rystad estimates as having 256 billion barrels of untapped oil. The next richest countries in terms of oil after that are Saudi Arabia, 212 billion, Canada, 167 billion, Iran, 143 billion, and Brazil, 1 best shale oil fields. But there are seas of oil just waiting to get tapped once oil prices rebound. Texas, home to the Eagle Ford, Permian, and Barnett shale oil plays, holds more than 60 billion barrels of shale oil alone, Rystad estimates. That's more than the untapped oil in all of China. There are also vast sums of oil beneath the ground in North Dakota, where the Bakken shale oil play sits.